Yeah, welcome. So this is gonna be the Sunday swings for just from me. Let's get into it. Okay, this last week we anticipated for CAT JPY essentially just to these have been the pairs for last week. Okay, I'm just gonna go over it very shortly, very briefly. Then I'm gonna analyze the pairs for next week. I'm gonna show you my account, everything it is, the trades that I'm in right now. So first thing that we're gonna cover is what played out, the trades that I took, and then next week's trades. From my point, I'm also gonna update you guys on tomorrow, on Sunday, because I might change it as well. The top pairs, so we can just compare to last week. If you wanna compare to last week, what I've said last week, you can go back. These have been the same pairs we analyzed last week at the weekend. Just go back. It's literally history. And yeah, you can see it with your own eyes, right? Okay, so what we anticipated for last week has been KJPY, a retest with them buy. Okay, we're currently in a trade right now, but we're gonna get to that later. GBP CAT essentially just a break and a retest of this level right here. So and it has happened as well. As you can see, Monday we analyzed the market on the 26th or 27th of October, and now this had played out on Thursday, Friday. So we had the break, but we never had the shift of structure in this zone right here. So where I have the circle, we never had our entry signal because we only enter our trades on lower time frames when we have a shift of structure or an entry signal, which you actually can see on the 30-minute time frame we don't have. So we simply avoided a loss by sticking to the strategy. Okay, guys? Next one, AUD CAT, daily time frame. What we were waiting for on AUD CAT. This has been a tricky one, okay? It gets a little bit complicated more on AUD CAT. We essentially just at the beginning of the week, this is the daily time frame. So this year has been the beginning of the week. We have been waiting for either a retest to then go short or a break, retest, and then sell. We had both. So we had both scenarios. We had both retest and both these scenarios, right? So, however, on Monday morning, as you can see right here, we had this retest pretty much on Sunday, right? On market open, we retested here already, but obviously we don't enter trades on a Sunday at 10 p.m. So this hasn't really been a trade that has been favorable for me or aligning with my bias, because everything we're doing is we're telling ourselves if this and this happens, then we're gonna do this and this. And yeah, but still, if it doesn't align with our strategy and the time zone and the time we are allowed to enter a trade, then obviously it doesn't make sense, right? You just gotta ask yourself a logical question, and you still have to stick to your trading plan. So this simply didn't take it. Obviously, we could have taken it later on when we retested right here. So this has been the first retest at the beginning of the week on Monday. Then the second one, this has been the very interesting because we retested the area of interest, and all we had to wait for during this time is a shift of structure, really. I can't answer you the question why I didn't enter it, because hypothetically I could have entered right here. So this is a short position tool. As you can see, the green box shows you the profit. This right here is entry, so we would have entered right here. As you can see, this little candlestick right here, this red one, this big one, is essentially the shift of structure. We shifted below this. This is the last higher low. But, okay, this is a big but. Oh, I'm actually not sharing my screen. Oh, fuck. Okay, now I'm sharing my screen. All right. So this shit, dude. Oh, this is so bad, bro. Okay, so last week we had CAD JPY. So how we're gonna structure this is very simple. I'm just gonna show you the pairs that have how the pairs from last week have played out. Then the second thing is I'm gonna show you my account on which trades I took and where we are right now. And then also my prediction for next week, my top pairs. And yeah, that's it. It's going to be very simple. I'm going to keep it as simple as possible and as understandable as possible for you so you can follow along. So CAT JPY last week, our prediction has been, sorry, I have to go to the higher time frame right now, as you can see here. This is the daily time frame now. So each candlestick, this is like the bar, represents 1 day of price action. So the price either going up in value or down in value. And as you can see, we have been waiting for a retest of this area of interest, which is this blue box, and a retest to this zone. So we essentially just set our alert right here. And then we have been waiting for a shift of structure, which is we were waiting for a shift from a bearish trend to a bullish trend on a lower time frame, which is the 2 hour, 1 hour, 30 minute, or 50 minute. Okay. And it has played out as well, as you can see, and I took a trade as well, as you can see. However, I entered a little bit like later, and because I essentially could have entered right here because we had the shift of structure essentially at this point right here. This has been a shift of structure because we had to close above this line, and let me just zoom in for a second. And this candlestick right here, I hope you can recognize which one it is. This candlestick right here has closed below, above this point, right? Which I marked off as the last lower high. You also could have taken another point, but I was just like, this is the cleanest elbow that I can see. And also if we are just like extra, if you want to be extra sure about it, then this would be the best elbow that I would take, really. And yeah, also the 1 hour is pretty much telling us this is the best elbow, right? So it's just like, yeah, using multiple time frames in a sense, but it doesn't really matter because we need our entry signal anyways. Then we had to read when then we went down again, we had a new higher high, and then what I said, because I didn't, obviously we can't take a trade at 5 a.m. as you can see down here. It's Friday 5 a.m. I can't take a trade at this time. And then pre-London 6 7 a.m. 8 a.m. we have been at this higher low point, and I wasn't on the charts by the time. I was busy. I was just driving. That's just how it happens, right? You're not always able to take trades, but that's okay because we gotta have an abundance mindset anyways. And if you miss trades because you're busy or whatever, it's okay. Like, don't beat yourself up, you know. Anyways, I saw this new higher high creating, and I just saw this whole market shift bullish now. As you can see, it almost looks like it goes from, if I just take this tool right here, we're creating lower highs, lower lows, and then we're breaking above the last previous structure point, which is here, creating new higher high, higher low, higher high, higher low, or shifted bearish actually. It doesn't matter because we created a new higher high just shortly after it. So I just saw that we shifted in the structure. Now we're having new higher low, and what we're anticipating is for us to go to the upside. So I'm actually in this trade right now, exactly how this position is drawn in. And yeah, the take profit is always set until 2.5. And yeah, simply setting forgetting and until 2.8. until the area of interest. Okay, so this is very simple. We're holding this trade. Next one, GBP CAD. We have been, if I go to the 4-hour time frame right now, as you can see here on the top left corner, we're on the 4-hour time frame, and we were anticipating last week just retest of the structure to then sell, but we never had the shift of structure on a lower time frame right here. So as you can see, price went down, then it went up again, and when it retested here, obviously the alerts hit, I got an alert on my phone and everything, and I'm just like, okay, cool. And now I know that GBP CAD is where we want it to be. Any time previously throughout the week, I'm not interested. I'm not looking at GBP CAD. I'm not looking to enter it or whatever it is. We are simply sticking to our analysis, which is a retest, a break, retest, and then sell. Until we are at this point, I'm not going to look at the market. That's the beauty of trading. Like, I can just set and forget. I just have to set an alert, which is basically set up in a way that when price comes from below here and it hits it, then I'm gonna get an alert on my phone. And that's the beauty of TradingView, and that's why you should get a subscription, because you are able to set multiple alerts. And I don't know if it's actually possible with the free version, but I actually don't know. I just got this version because it's better, I think. But I don't know the free version. I think I just got the paid version actually because of ads. Because if you would have the free version, you would have ads pop up in the top, in the bottom left corner, which is, for me personally, it's kind of annoying. Obviously, if you're okay with it, just use the free version. But I'm like, I want to focus on the charts. I don't want to have anything else right there. It's just like 15 euros per month. Like, instead of buying Netflix, buy a TradingView subscription. You're gonna make more money, really, rather than just wasting time. KGBP CAD, we never had the shift of structure. If I go down now, look at the top left corner, I go down to the 2-hour, 1 hour, 30 minutes. I'm looking for shifts of structure. Do we have a shift of structure? No, we don't have shifts of structure, because this is simply the higher low. It's the higher high. We never close above or below. Then we create a new higher high, and it simply went straight through the area of interest. So we simply avoided a loss by sticking to our shift of structure, strategy, and trading plan, right? Because we only enter trades when we have the shift of structure or an entry signal on a 2-hour, 1 hour, 30 minutes, or 50 minutes. Very, very simple. So this trade is simply gone. We're not interested in this trade anymore for now, and we're just going to focus on other markets where we might have bigger opportunity right now. So now AUD CAD. Let me switch to the 4-hour time frame again. If you look at the top left corner, we are at the 4-hour again. Okay, so as you can see right now, this market has played out last week. So if I just draw maybe a vertical line, this has been the beginning of the week, this vertical line. So all we have been waiting for is a retest, or let me actually see. Either we were waiting for a retest of this higher area of interest, or an alternative would have been price goes down immediately, retests this area, and then goes down. So yeah, these have been two scenarios, and the interesting part right now is that both things happened, because as you can see, the very next candlestick on Sunday, it immediately opened, and it immediately, as you can see right here, if I just zoom in a little bit, maybe you can see right here, this is Sunday. If you look down, Sunday 27th of October, 10 p.m. And it immediately wicked up. You can see this little line right here. It wicked up into the area, and then it went down, and it retested kind of like throughout the night. So yeah, but obviously we don't trade on a Sunday, we don't trade on market open, we don't trade in the night. We only trade during London session, pre-London session, or New York session. We don't take any trades outside of these sessions simply because there's no volume, and it's like trying to, don't know, like go from A to B, and like, yeah, it's just like you have to go there when there's volume. Like there's nothing going on. It doesn't make any sense. It's like trying to fish in an ocean when there's no fish there and they are somewhere else because of like the waves or whatever. That's like the simplest analogy I can come up with. You gotta fish when there's fish in the ocean, right? When it's like when they're just naturally there because they're just there, right? I don't know. Yeah, going out for at the right time. So we didn't take this trade, and then it retested here. And as you can see, we kind of like had a shift of structure. Let me actually draw that zone in. So yeah, Sunday market opened, retested, came back. Then it retested it as well. So the second alternative played out directly after the first alternative, which we have missed. Now, if you look at this, hypothetically, we could have taken this trade, right? But because we have a shift of structure, essentially just if I go down to the lowest time frame, which is the 50-minute, we can essentially see, right? We have the shift of structure right here. It's very simple. This is the last higher low, this is the higher high. Then this is the new, obviously, body closed below this line right here. So this is the new lower low, this is the new lower high. And now we are simply bearish. So it's been a good entry signal as well. So we could have potentially entered at this point. Of course, we can wait for retests always, because we always know market consists of mostly higher highs, higher lows, and always retests at the previous structure point. As you can see, I mean, as you can see, we always coming back to, I mean, this, right? Like this higher high has to create a higher low to push up to create a new higher low, higher high. So it always comes back and retests the previous structure point, most likely. All right. So this one. So let's just go from the bottom. Creates a new higher high, has to come back, creates a new higher low, creates a new higher high, has to come back, has to create a new higher low, retests this structure point, creates a new higher high, comes back, retests the previous structure point, and then, as you can imagine, the trend continues until we get a shift of structure. That's how most likely the market is. And yeah, most of the time, right? These are the trends that you want to take and you want to get on. That's why we wait for shifts of structures, for entry signals, and all of that stuff, right? So as you can see, that's exactly what the market has done. We had a series of lower highs, lower lows. I'm just going to draw that in. This has been the last lower low. Then, as you can see, we've created new higher highs, higher lows, until we shifted right here. So this has been the last lower low, lower high. This is the last lower low. And then as soon as we closed above this point right here, so this higher high makes this whole trend now bullish. Okay, it's very simple. So now at this point, the market has been bullish, okay, because we closed above this previous lower high, okay. So this is how you determine the trend. Okay, so now we bullish. Now we know, okay, we came back to the area of interest, we bullish. Now we need to wait for it to turn bearish again so that we know we can take the trade to the downside. Because remember, we were waiting for a break, retest, and then sell. So in order to take this trade to the downside, yeah, cool. We know that during this point, market has to create lower highs and lower lows, right? And in order then at the lowest point, in order to have this pullback right here, the market has to create new higher highs and higher lows, and the market might temporarily turn bullish, right? It doesn't have to happen. It depends on the type of trend that you have. Because if you would had hypothetically just a huge candlestick to the downside right here, then the market would stay bearish because we don't have any we don't have any lower highs and lower lows. It's simply one candlestick. But as you can see, it's lower highs, lower lows, lower highs, lower lows, and we closed below the above the structure point. So we went temporarily bullish, and we had to wait for a shift of structure again at this area of interest. We got it right here. We are bearish again. It's the same thing if you just flip the chart, right? We close above, right? Obviously, this is bearish. I'm gonna invert the scale again. So you just have to flip it in your mind, right? It's just simply the same thing. So this is the last structure point. Higher low, higher high. We close below this line. And now we are bearish. Very, very simple. So this is where you could have entered, but this is what a beginner would do. A beginner wouldn't understand the fact that market most likely always in a trend creates higher highs, higher lows, and always rejects previous structure point, right? Same thing with the downtrend. A beginner wouldn't understand that market always ideally creates lower lows and lower highs and rejects previous structure point. As you can see, creates a new lower low, lower high, creates a new lower low, creates a new lower high, and retests the previous structure point. Then pushes back, pushes down, creates a new lower low, retraces, has a new lower high, and what does it do? It retests previous structure points. So knowing that and understanding that market most likely does that, you know, okay, cool. I can get a better entry point if I actually enter the trade just on a pullback, on a pullback that would give me a better risk to reward, because you can just tell, right? We always want to set the stop loss 5 pips above the last structure point, basically, which is this right here. As you can see, this is 15 pips. This is the number right here. This is what we want to look for. It's the third number in the row after the percentage. You can always count the pips. So we want to always want to add 5 pips to it. We want to take the body. We want to take the body as an indicator. We don't want to set it at the wick right here. We want to set it at body. And then we want to count 5 pips. So this would be 15 plus 5 is 20. So this would have been the perfect stop loss, but we need to aim for 2.5 risk to reward. So this doesn't apply with our strategy because this is the next take profit. And at this area of entry, we don't get a 2.5. So yeah, like this is essentially just how it is, right? So now if you're an advanced trader, you know how we discussed before. Market creates lower lows and lower highs. So what can we wait for? Exactly, we can just wait for a lower high. And where would it make the most sense? Well, at the last structure point. So it would make most sense to set it at exactly this point right here. Oops, sorry. At this, we just draw like a circle around it, this point, right? I mean, it makes complete sense because closing below this line has made the market bearish. And if we retest this structure point now, this would be perfectly in alignment with what the market is doing, right? So we could have set the entry point right here, which gives us already a 2.4. Like this is a massive difference because the leverage on it is so big, right? Like you have 1.8 compared to 2.5 almost. So you can enter at 2.5, you have your risk to reward. And yeah, you could have taken this trade, honestly. if I said this, you would have made $2,500 with a 100K account on the trade. Now, why didn't I take the trade? I can't answer you the question. I was simply probably focused on another trade or whatever it is, or I was just not prepared properly. But this is why we learn this shit, and it's so important to go through it. And we see that market plays out, and even if you don't get it, like, don't beat yourself up, learn from it, and be prepared next time. Next time we know, yeah, cool, like market is doing the shit, you know. And yeah, it actually came back 1, 2, 3 times again and retested this area of interest. So even if you missed this opportunity right here, you could have entered right here or right here. Obviously, the shift of structure is like down here on almost all these trades. So the risk to reward doesn't make any sense. But it just shows you that it makes sense, and strategy is just so you know what market is doing, and you can set your take profits, stop losses accordingly. It's just supposed to give you an understanding of what the market is doing. It's everything it is. Okay, so enough talking. Let's get to the next pair, which is Euro JPY. So Euro JPY, we were waiting. Let me go to the 4-hour time frame again. We were waiting for a retest of this area of interest. Never happened. Very simple. Let's get to the next one. NZD JPY. We were waiting for a retest, break, retest, and then buy. As you can see, if I draw a vertical line right now, this has been Monday. We never really broke out of the zone. We always stayed inside the zone, as you can see right here. And yeah, so we are simply not interested because we need to break out of it, right? Like a little bit more to be able to enter this trade. And that never happened. We simply avoided a loss by just sticking to all buys, right? And Euro AUD, very simple, never happened. We were waiting for a retest and it never did it. Okay, so let's get to next week. And actually, before we do that, I want to show you the account. So let me go to FTMO. This is just one account that I have right now. Okay, I don't want to share my password or anything right here. I think it hides it. Yeah, perfect. Hides it. Or you can't see my screen anyways, right? Okay. Okay. Let me share Google Chrome. Okay, Google Chrome. All right, cool. Let me go to metrics. Let me show you the trades that I'm currently in. So the trade that I'm currently in, live metrics. Yeah, we want live metrics. All right, so we are right now. That's where we are. KJPY. You can see I took this position on the 1st of November, which has been yesterday on a Friday. We took it at, I think I took it at 12 a.m. But for some reason it shows like a different time right here. I don't know which time zone it calculates it. So I took this trade at like 12 a.m. German time. I don't know which time zone this is, honestly. Might be like Dubai or something. So yeah, you can see right now, this is the account. We are right now on KJPY. And yeah, it's pretty simple, man. You can see the trades, right? This is just to be transparent. I'm taking these trades, and yeah, let me go back. Okay. Let me go back to trading view. Okay, so we're just gonna go through the markets very quickly. And yeah, okay, let's start off. So KJPY, we're just gonna hold this trade. As you can see, if we analyze this trade and just analyze every single time frame, we took this trade because it's beautiful, right? So first of all, we have weekly time frames bullish, right? We have this lower high, lower low, new potential lower high. Then we close below this last structure point, making this the new lower low. Then this is the lower high. Now, when do we close above the last structure point? Right here. So we closed above this last lower high, making this market now bullish, right? As you can see, this is now this lower low turns into the higher low because this is bullish now at this point. So this is the higher low and this is the higher high. Now, the market now created a new higher high right here, making this the new higher low. If you zoom in, if you would zoom in, you know that this market has closed above this candlestick right here, making this another higher high. And as you can see, we kind of like created a new higher low with a wick, and this is a pretty fat doji candlestick. So yeah. So daily time frame. Okay. So weekly bullish, daily is bullish very clearly. Just gonna start from here. Lower high, lower low. Never shifted. Now we shifted because we closed above this structure point, making this new high high, higher low. This is the new higher high, closed above this. This is the new higher low. Snake trick, right? We have to go back. Higher low, higher high, never close above or below these points. So we are currently having a pullback. And as you can see, we entered perfectly at the pullback. We having this tool drawn out at the pullback, and we are hoping for price to, or essentially betting for price to go up from here. So daily bullish. And obviously we know that in order for the daily time frame to have its pullback, the lower time frame might turn bearish temporarily. So the 4 hour, as you can see right here, is bearish right now, but it's okay. We only need 2 time frames in sync. However, we understand the strategy, and we understand that the strategy is just there for us to understand where we are on the move. So everything I know is we are at the area of interest. We're having a pullback. We are bearish on the 4 hour, but it's just because we are having a pullback on the daily time frame. And knowing this, I assess my risk by myself and I make a business decision off of it. Now, okay, if we look at the lower time frames, this is where we look for entry. And as I mentioned previously, we had the shift of structure right here. We closed above this structure point on the 30 minutes. This is the previous elbow. We closed above here. We had the pullback. We pretty much missed it, right? Because we have been busy. So I just saw this higher high. And then after I saw that, I knew, okay, cool. This is creating like lower highs, lower lows, lower highs, lower lows, creates a new higher high, new higher low, new higher high. And when I see that, and I see that the market shifts to bullish structure on the 30-minute time frame, boom, I know like this is the right time to enter the trade. I know right now that market most likely is gonna have a pullback at this higher high. So everything I did was set an alert, like down here, down here. This is where I entered the trade. I set my risk to reward tool right here, because if I would have entered here, like this would have been a 2-to-1, which doesn't get to our level of risk to reward really. So yeah, we just by simply being patient, we got our 2.5 and even more. And yeah, so we got 4 hour bearish, but it doesn't matter. So weekly area of interest, as you can see, we had 1, 2, 3, almost 4 taps in the weekly area, and daily, obviously, I mean, it's very self-explanatory. We've got 1, 2, 3, 4, 5, 6, 7, you know. So it's a weekly and a daily area of interest. Both of them count as 10%. Then we got the weekly touching the EMA. So you can see price went above it, and we are now retesting this EMA. So this blue line. Now, weekly previous structure point is this one right here because it's the previous structure point. And it is pretty much retesting it because we're having this wick right now. And then, yeah, it's pretty simple. Now, we have also got around psychological level. As you can see, this is at around 190,000. No, 109,000, I think it is, right? So yeah, it's around psychological level. And yeah, so let's go to the daily time frame, daily of interest. And we also got daily previous structure point, right? It's right here because if we draw in the trend, this would be the higher low, higher low, higher high. And then all of a sudden, wow, what a coincidence. If I just draw this out, right? So I just drew in these lines to represent the trend. If I just take that out for now, you can see, right? What a coincidence. We are just creating a new higher high, and all of a sudden we're just retesting this previous structure point. So everything should make sense from now. I mean, it doesn't get any simpler than that. Okay. Okay. So we got daily previous structure point, which counts as 10%. Now, everything we're doing right now is looking for our entry because the 4 hour didn't give us any, like, it's not retesting the EMA. We don't retest the previous structure point, and we don't have a candlestick reaction, rejection on the 4 hour. So we haven't drawn in anything of that for the 4 hour. So everything we're looking for is for entry and shift of structure from the 2 hour and below, right? From a time frame perspective. So this is very simple what I've gone through already. We had the shifts of structure here. I've gone through it like I think 2 or 3 times already. I don't think I have to explain anything further. We're just waiting for the trade. So this was a little bit more of an in-depth explanation, but I hope it makes sense right now. Okay. Now, GBP CAT. Am I going to be interested in this week? So everything we're doing now is having a top-down analysis because the week has played out right now, and we always have to start at the highest time frame that we have, which is the weekly time frame. As you can see at the top right here, it's the weekly time frame because there's no point in starting our analysis on a 50-minute time frame because we need to know where we are in the move, like, because the weekly time frame and the daily time frame, or the highest time frames, are simply the most respected time frames. It's as simple as it gets, right? So if we just look where we are in the move, and then we decide whether or not it makes sense to trade, right? So you can see right here, this is the higher low, this is the higher high. I'm just taking this as a starting point because it just appeals to be the best starting point. It doesn't really matter where you start. You could also start 10 years ago, but it's unnecessary. This is new higher low, and now we know, okay, this is the trend. This is where we are in the trend, and as you can see, this is the weekly time frame. So this is pretty much bullish because we have created a higher high, and this is the higher low. So these are the two lines, and we haven't closed above this line. As you can see, this price is below this line, and this price is also not below this line. So we haven't closed above or below. We are in the middle. So we're still bullish, right? We haven't created anything. And this shit right here is simply nothing, right? It doesn't count as anything. It's just market structure. And everything we're focused on are these 2 points right here. This is simply market structure, nothing else, as long as we stay between those 2 lines. Okay. So now, knowing this, we know, okay, we already had the reaction, we already had the push on GBP CAT, and we're simply not interested because the main trade has already played out. Because in our strategy, we're always waiting for a higher low in a bullish market to then buy in an area of interest. And as you can see, this blue box is the area, and we're simply at yeah, in the middle, kind of like creating a new high. And everything we would wait for now is obviously if I just draw it in again. Let me just draw it in again. High, high, low, high, high, low. Everything we would wait for. Oops. Shit. Let me just draw that in. Everything we would wait for is market to, I don't know, do something. Either create a new high or reject from here, maybe to go down. And if we are here right now, we're still bullish. And if you come back to this area, you can see this is a structure point, this is an area, and then we can buy again, right? We don't have to create a perfect trend for us to take trades. But right now we're not interested because we're not buying here. We're bullish on the weekly time frame. So we don't want to buy at this point. We're not here because we want to buy here. The train is already gone, right? It's like, don't hop on the train that's already pretty much near the destination. We want to hop on like either at the start or at the middle, right? But we are almost near the end, so that's not something that we're interested in. Okay, I hope that makes sense. And you pretty much this principle that I just explained to you with hopping on trends when it's early or almost like in the middle and like, but still early. This principle has to be applied to every single time frame because market creates trends on every single time frame. When you wait for your shift of structure, when you see these when you see these trend shifts on the lower time frames, you apply the same shit. It's nothing else, bro. And everything you can do is assess for yourself where you want to hop in. Understanding this principle, it's pretty fucking simple. So we're not interested. Let me just mark away all these things so that we can tick off every single box. So we stay organized and we know where we are, okay? So CAD JPY, we're still holding it, watching for next week. GBP CAD, we just analyzed it, ticking it off with the blue mark and dropping it to the bottom. We are not interested, okay? Let me sip some tea. Just see. Okay, let's continue. I'm gonna make it short and simple now. I think it was enough principles. We're just gonna continue. So now, as you know, we have just dropped it to the bottom, GBP CAD. I'm not gonna look at the daily. I'm not gonna look at the 4 hour. I'm not going to look at the 2 hour, whatever it is, because the weekly already tells us like we're not interested in, because yeah, there's no point in wasting time on these time frames. That's why we do the top-down analysis. And it saves us not only time, that's not the main thing. The main thing is that we buy at a point or we take trades at a point where it is simply most respected and where we have highest chances of winning. The fact that we just save time is just a positive side effect. It's not the main thing why we do it. It's because we want to buy at a weekly area of interest, daily area of interest, and we want to buy with the weekly trend. That's everything it is. That's the main fact. Okay. AUD CAT weekly time frame. I think it makes a lot of sense now, and you should have an aha moment. So congratulations. Okay, weekly time frame. So what we have here, we have on the weekly time frame, this is the higher low, kind of like market structure, new higher high. Now we having a pullback, right? We kind of like went past this previous structure point, and as you can see, this is like pretty good indication that this market could go up because we have a very beautiful rejection candlestick right here on the weekly time frame. And what you need to understand about like candlestick rejection is that the wicks tell you a lot of, like, the wick Like this line tells you a big story about what price is doing, because it's like these babushka figures, right? It just shows you what the daily time frame is doing on a time frame, because right here you can see on a daily time frame, price came back and rejected this point, which is like a support level right here. You can see resistance, 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 support, support, kind of resistance, and now all of a sudden, oh my god, it rejected here. And on the weekly time frame, it's a wick. So this is why we have candlestick rejection as a confluence in our trading plan. And this is perfect because now we can take this as a confluence in our trades. And just because this price has went a little bit below this structure point, it's okay, because it's never going to be perfect. Price sometimes rejects a little bit above it, sometimes a little bit below it. Like the market is never perfect. Every moment in the market is unique, and that's like a belief that you have to ingrain into your subconscious mind. Then you will win, because no trade's gonna be perfect, really. You just have to understand the principles. Okay. Now, so daily time frame. I mean, daily time frame is pretty much bearish, and 4 hour is pretty much bullish, right? So this is like a weird thing now, because we have weekly bullish, daily bearish, and 4 hour bullish. This is like weird, right? Because we have weekly bullish, daily bearish, and 4 hour bullish. This doesn't make any sense, right? Because lower high, lower low, lower high, lower low, higher low, higher high, higher low. You know what I mean? Then daily time frame. Yeah, this is pretty fucking shit, dude. So what I would be waiting for is, I'm not interested in buying this market right now. Even if we have this strong candlestick rejection, we could still fill this wick to the downside. Especially because we have this head and shoulders pattern on the daily time frame. This is like a unique thing that happens. Head, right, and then we retested it, go to the downside. It's a strong indication that market goes down. So everything I would be waiting for right now is potentially for this market either to create so we either have to create like a new higher high point from here and then close below this point, or or we just drop immediately, retest, then sell, right? So one of those two scenarios should play out next week. And whichever one happens, we're gonna take it. We're just waiting for the 4 hour to turn bearish. So I'm gonna write down waiting for 4 hour to turn bearish. So yeah, this is pretty simple, very straightforward. Okay. And obviously that's like kind of like the risk that you want to take. I mean, we just explained everything, right? That we have this trend, rejection, previous structure points, candlestick rejection. And like you can assess the risk for yourself. Do you want to take the trend against the weekly time frame? Trade against the weekly time frame? That's totally up to you. You can still make money on it. It's not the question. So it's just dependent on what you want to do. Just, do you want to take it or not? Like, assess your risk and make a decision for yourself. Okay. EUR/JPY. We are pretty much at the highest point. Just still waiting for it to pull back. I think I'm not going to be interested, because we just got back even further from the area where we're interested in trading this market. Okay. NZD/JPY. We never got any I think we would still wait for like a retest to then buy, because we created like some candlesticks right here. So still waiting for the same shit like last week. Euro AUD, not interested in it. It's because you have to ask yourself, right? Would price just come back within 1 week, reject this area, and go up within the same week on a weekly time frame? Like, do we think it's just gonna create a wick to the downside and then head to the upside? Like, probably not. Like, the odds of that happening is very, very small. Most likely, market's gonna have a pullback, right? Like 1 week of a pullback, 1 week of a rejection, and then 1 week of a push, right? So this trade would take longer, and it's not gonna happen next week, so we're not interested. Euro JBP, we are currently bearish, so weekly bearish. We're having the perfect pullback right now. And this is actually pretty solid, dude. It's pretty solid. Even though we are bullish on the even though we are bullish on the daily time frame, I still think this could head to the downside, but this is a tricky one, because I would say that we would have to wait for some more price action, because daily now is bullish and 4 hours also bullish. Okay. So what we have to wait for, what we would have to wait for is, I think, this is the last lower high, lower low. Oh yeah, like probably this one. And we close above right here, so we're bullish. Yes, tricky one. But you always have to ask yourself, right? Like, whenever we are at this price, yeah. Yeah, I'm not interested. Like, for the daily to turn bearish again, it would take too long. Just look at it like it had to create like a new higher high, either a new higher high, and then shift, and that would take too long. Yeah, so not interested. We have other markets, abundance mindset, right? GJ. Okay, let's switch to the weekly time frame with the highest point. Not interested, because like, yeah, do we have a daily area of interest? That's the question. So we have kind of like, yeah, we actually have an area of interest. So yeah, this is our box. Higher low, higher high, and then we draw the box to the left. Then we draw it down. Okay, when do we have points? When are we rejecting? We want to have as many points as possible. So we don't need these boxes anymore. We don't need them anymore, because this is the structure that we need. And if we draw to the upside, we want to get as many bodies as possible, right? So we have 1, 2, 3, as you can see. 1, oops, 2, 3. So we got 3 taps. Perfect. This is our area. So weekly bullish. Daily is very clear. I wouldn't count this as an elbow right here. So weekly bullish. Daily is also bullish. 4 hour is bearish. Daily bullish. But like, as well right here, it's like you gotta ask yourself, how likely is it? Because you just gotta ask yourself, right? It's this is a daily area of interest. Now, just because it's daily area of interest doesn't mean it's got a hefty reaction, right? Because you gotta ask yourself, we had the highest point right here. Most likely, you don't want to buy at the highest point, really, because market's always gonna have a pullback. So it's gonna be a safer option to just wait for a pullback to put to another potential area to then buy. So this is not really something that is pretty attractive for me, right? Kind of looks like we are rejecting right now because this is doji candlestick indicating to us that market is slowing down. So yeah, market could reverse now to have the pullback. So next week, I'm just simply anticipating for the market to have a pullback, and then the week after, I'm gonna take a trade to the upside potentially. Obviously, you could take counter trend trades right here as well because we have a solid shift of structure here on the 4-hour time frame, and also as you can see, left head, kind of like right shoulder, right, retesting the neckline, which is like, yeah, could take it, right, if you want to be a degenerate because like you could take the trade to the downside because we know, yeah, on the weekly time frame, market must have a pullback in order in order for us to buy. So you have the weekly doji and everything, which is indicating like it's slowing down to have the pullback. So it's like you can assess the risk for yourself. Do you want to take it? Do you want to take a trade against the weekly trend? And yeah, simply up to you, man. If you want to be a degen, I don't want to be I don't want to be a degen, so no thanks. Just gonna wait for it to create some more market information. GBP USD, it's like the flip-flopped version of a GJ, creating a new, no, actually not. It's actually creating a new higher low potentially right now. We are still bullish. No, we actually not. We're bearish on a weekly time frame because we have to zoom in, right? You could have thought, but this is the higher low, higher high, close below, right? So this is the new lower low. So we're bearish. This would be an area of interest on a weekly time frame, on a daily. So daily time frame, as you can see. Yeah, so we would just wait for, very simple. We would wait for, also, do we need this area right here? Let's reject from here. Yeah, could. So we have two areas of interest. So we got, what we have? This one. I mean, daily time frame. It's a difficult one, man. Because like weekly is so fucking, it's difficult. Daily time frame. Honestly, I think I would wait for a larger pullback. At least until here. Market is simply in a downtrend, man. Because we're like kind of like creating a new lowest point in these time frames. So yeah. Because like bro, we're like almost like at the lowest point. We're creating like the lowest point on a weekly, so you have to be careful, man. You can't buy at an area right here, really, because market most likely is gonna have a larger pullback on a weekly. You gotta keep that in mind, right? So is it really smart to set an area of interest at this point right here? We have 1, 2, 3 taps, but you gotta keep in mind, weekly time frame is probably gonna have a larger pullback. So I'm simply like, yeah, I can watch this market because as you can see, like this is still a good trade. This could come back to the EMA, retest it, then we could head down, right? I mean, it's possible, but like, yeah, it depends on you. What kind of risk do you want to take? I think for me, bro, the daily, I mean, it looks pretty good, honestly. So we have, let's see, one would count on these two. So we got 1, 2, 3 taps. If I draw this out to the left, we would have even more. So yeah, you can see right here, right? This is support, support, support. And then obviously, right, this is resistance, support, and now turning again into resistance. So what I would watch, this is not my favorite, but potential scenarios, just retest it and sell, right? And until this point, we have a lot of downside potential. And yeah, we could also
because if this shifts now, I mean, like we could pretty much fill this wick right as well. So yeah, I could just drop, right? Just gotta ask yourself how high are the odds, right? I mean, it did it right here, like in the past, it did it right here as well. We kind of like never created another structure point, so it could just drop, right? It can happen on a weekly. So yeah, I'm gonna keep that in mind. It's not my favorite. Okay, Euro NZD weekly time frame. We at the highest point again, slowing down, candlestick, having the pullback. Yeah, so just waiting for it to come back until this area right here. I don't need these zones anymore. And yeah, I mean, we are still bullish on a weekly time frame, so this could pretty much head up to the upside. And yeah, daily is also bullish. Weekly bullish, daily bullish, and the 4-hour is bullish. Okay, cool. We are bullish. Now, when is it gonna stop to have a pullback? I think potentially. Yeah, well, where is it gonna have a pullback? Is it gonna have a pullback? I would say, yeah, this is the best area of interest that I have right now. I don't want to count this in. So everything I'm waiting for is a retest of this area to then go long. Very simple. AUD USD, creating a downtrend, weekly time frame. Let's start off there with the lowest point. We are still, yeah, we're bearish on a weekly. Let's delete this. We bearish here. Lowest point. Yeah, I'm not interested. We have better markets. Just like can have a pullback. Don't want to mess with it. GBP CHF. Look at this shit. GBP CHF. This is just a fucking mess. Like I'm not gonna waste any time on that. NZD CAT weekly time frame. We having this potential left head, right shoulder, and retesting the neckline potentially. So yeah, this looks good for sales, and so I would just be waiting for a retest and EMA. So I would say we just move this down, waiting for a retest right here, and then take the trade to the downside because we're pretty much bearish. And yeah, probably the 4-hour would turn bearish then as well, but it's a lower high, it's a lower low. Yeah, I mean, could still count as bearish on a daily. So yeah, I'm gonna mark this off maybe. Let's see. Let's see what other markets give us, right? Okay, Euro USD currently having the pullback, showing signs of rejection. Daily turned bullish, 4-hour turned bullish. Cool. So potentially just waiting for this market to finally have the tracement to this EMA to then sell. Very simple. I don't want to trade this. USD CHF. Okay, weekly. Yeah, at the highest point, we're having no signs of rejection. We're pretty much bullish. So we would wait for a pullback to then buy. But with the highest point, this would take multiple days for it to come back to this area. You know, as you can see, we have a lot of space, so I'm not interested. This won't happen next week. Not interested. Now, NZD USD. Okay. We're pretty much at the lowest point, and we are bullish. Okay, so I mean, what could happen is that we are just simply going to the downside. We simply did it in the past as well, right? Like close below here, went down. You could take the trade to the downside. I'm not saying you can't. Be below this area, but do you want to do it? I don't. I'm not interested. It's just too much. GBP NZD. Okay, weekly time frame on GBP NZD. Showing signs of rejection. It's like very similar, all these markets, man. Do I need all these areas? I don't need this area. This is fucking bullshit. I need this area. Is not interested in it. Okay, let me see. Okay, GBP NZD. We could trade. This is an area of interest. If like potential zones, right? So we could buy from here, pretty much. We're kind of like having the move already on GBP NZD then, because we already rejected it right here. So should have ended right here. But I don't know. Draw down to the left. Is this area too big? Like this is 80 pips. This is way too big, bro. This is not an area. You want to have a tight. You want to make this an area? That's too big as well. Do you want to make this an area? Wait. It's also way too big, bro. How you make this an area? Pretty much, right? But nah, I don't want to do it, man. It's just to remove this to the upside a little bit. Like this, right? And you just make it bigger a little bit. Like this. So you have support, resistance, and support. This support, resistance. Yeah. This is what I would be interested in. Let's come back right here. Don't think it's happens this week though. I think it has to have like multiple, like a week of a pullback, a week of a push. So I'm not interested. USD cats weekly, no. I mean, yeah, don't have to waste time. USD JPY, no. AUD JPY. This could be, yeah, bullish. We just turned bearish now. Bearish on AUD JPY. Oh fuck, dude. No, I don't want I don't want to have anything to do with it. Just looks like it doesn't look clean, bro. The daily here, right? So no. So these are my top pairs. CAD JPY, just waiting for it to play out. AUD CAD, waiting for either a retest to then sell or a break and retest to then sell. And the DJPY just looking for, yeah, still the same thing. AUD CAD, we got it covered. GBP USD, same thing. UNZD, we tested and buy. Yeah, so I would have to organize them after importance. CAD JPY playing out. I would say NZD JPY happens quicker. AUD CAD, I'm more interested in it though. Euro NZD. Yeah, it looks cleaner. GBP USD, Euro USD. Which one do I like more? Weekly time frame. Which one do I like more? Euro USD, GBP USD. The GBP. I would say I like both of them actually. But Euro USD looks like, yeah, Euro USD is better. Daily GBP USD. Yeah, Euro USD is better than GBP USD and NZD GPY. Euro NZD weekly time frame. I'm not a big fan of that either, man. Like, I think let me just see. I would say even like this. GBP JPY. Oh yeah, CAD JPY, AUD CAD, Euro USD, GBP USD. Okay, I'm happy with that. Yeah, I'm pretty happy with it. what I would say Euro NZT's last. So these are my top 1, 2, 3, 4, 5, 6 pairs for the week. Okay. Let's fucking go.